Hello, everyone. My name is Wais Asmal. Welcome to another episode of Two Ways to Skin a Cat, a show where we talk career experiences, entrepreneurship, and investments. The main aim is to show that there's more than one way to be successful other than climbing the corporate ladder. We are live on LinkedIn and YouTube, and the show will be available on the podcast by tomorrow morning. So don't forget to like, subscribe, and click on that notification bell to get automatically notified when the next episode comes out. If you're joining us live, please drop a one in the comments so that we know we're not talking to ourselves, and drop a two in the comments if you're watching the recording. My guest for this week is Hitesh Dullabh, chartered accountant in investments, finance, and private equity, and it's also an investment associate at Edge Growth. Hitesh, thanks so much for joining me today.
Hi, always. Thanks, and thanks for having me on your show. It's a real honor to be here.
Let's just jump straight into the meat. Tell us your story. Where do you come from? And even outside of work, who is Hitesh Dullabh?
I think the best way to put it is I'm a Lens boy or Lenasia boy. I grew up in a sort of previously disadvantaged community. Went to a public school, sort of didn't know what I was doing with my career. I have both parents that are not educated beyond matric level. And the biggest thing growing up was you've got to do something with your life. And my interest in school and my interest from a personal perspective was always understanding business, numbers, accounting at school. And that's what led me to basically becoming a CA or studying towards becoming a CA, because from the people I spoke to and the experience was that it's the hardest or the toughest commerce degree you can, or commerce route you can go down from an intellectual perspective. So that's why I decided to become a CA. Basically, from there on, did my articles almost similarly to most CAs at an audit firm. Thereafter, I spent a bit of time in New York, and afterwards, I spent about 4 or 5 years in the banking industry, actually, opposed to my audit experience, which was in consumer markets and technology. So I actually spent some time in the finance or banking industry as an accountant or financial manager in different divisions, handling different portfolios. And then somewhere in between, I decided, look, this isn't for me. I actually wanted to learn more about business. And that's the reason I wanted to become a CA, is to become an all-round business professional, understanding business from not just the numbers angle, but from a strategy angle, from operations angles, from a whole lot of different angles. And that's why I said I decided to actually take a step back from the role I had and sort of basically start fresh or start new. And because of that, I actually decided to study again, which I wouldn't have done had I been happy in my, or been content with doing a financial manager position. And that's why I decided to study again. I was fortunate enough, to get, or for some people to back me or to understand my value and to see that I could actually do the sort of work within the deals, investment space, analyzing businesses, looking at businesses, due diligences, and took a chance on me. And that's where I am today and why I am here today. Yeah.
And you touched on it briefly, but outside of work, well, what do you do on the weekends? Who are you on the weekends?
Well, while doing a master's, I would say I was nobody on the weekends. I was basically confined in my little room and doing my thesis. But an interesting about me is I'm an avid football supporter, especially from the English Premier League side. One of the news I can share with you is I'm actually embarking on a journey to go on a coaching or managerial course that's run by the FA Scottish Association. So that's something I really want to do outside of work. And it's something I'm interested in. So that's one of my pet projects on the side that I actually want to achieve. Yeah.
Oh, that's amazing. And I think, and the team that you support, since you mentioned it?
I don't think it's worth mentioning it in public, but it's a red team that's not doing very well. So
I'm in the same boat. I'm in the same boat. But anyway, we move on.
We just accept the situation as it is, and we watch the games and we hope and we pray. Yeah.
You mentioned it a little bit earlier, but you said you did audit in consumer, industrial markets, and technology. And that's not close to finance and to corporate finance or venture capital or private equity. For the general accountants out there, or even people who are in the same boat, like if somebody wants to move from where they are, that has nothing to do with corporate finance, but they're currently maybe in accounting or reporting, what advice do you have for them? You told us about how you made the switch, but what advice do you have for them to make that switch?
I think you spot on, always. Traditionally, the guys that land up in the sort of corporate finance or private equity or venture cap space or roles are the ones that actually do audit or land up in an investment bank or doing the articles in an investment bank or graduate program in an investment bank. What I wanted to do was get a whole round experience in my audit articles. So at that point, I didn't know what I was going to do post my articles. I just wanted to get as much exposure as I could in different businesses. And I don't necessarily think that's a bad thing. So historically, I know that that's been the feeder into this sort of industry, into the private equity, corporate finance industry. But I do think there's a lot of value add in getting exposed to other businesses, because the private equity and venture cap space is not necessarily your banking or insurance industries that you're financing. You could be financing tech industries, you could be financing retail, you could be financing wholesalers, trucking, logistics, a whole lot of industries. So I think that narrative is changing now. So I think it historically was difficult. I think it's getting more easier to translate those skills that you get from those industries into this space, having that industry knowledge. What I've done personally myself is, obviously, when you look at roles in these industries and when you look at positions and titles, it's about, you got to understand that it's not just you that's applying. There's a whole lot of other people almost with the same qualifications. So what makes you different and what makes you stand out? One of the things that I had to do was sort of self-introspect and inspect and see, like, how do I make myself different from the next candidate? Or how do I make myself stand out from somebody who's done the financial services sort of articles or grad programs? And to me, it was upskilling myself technically, and that was doing a master's as well as, and it doesn't necessarily mean doing a master's. There's a lot of people who do CFAs. There's a lot of people who do online courses, practical courses to get themselves up to speed with what's happening in that industry and how to actually articulate and conduct themselves in that space with interviews and things like that. So that's the one thing that I had to do personally, and it actually worked out for me. And look, I was fortunate enough that there were people within the industry that were willing to take a chance on me based on my experience and history. The fact that I was exposed to so many different industries, the fact that I was pushing myself to get competent from a technical perspective in the industry. And I was lucky enough to get that opportunity, and that's how I started. So basically taking a step back to go 2 steps forward, basically. Always.
Yeah. And if anybody's got any questions for Hitesh, please add them to the comment section, and we'll deal with all the questions towards the end. Talk to us about your experience with the deals that you've been involved in. Lots of people have business ideas, think they can raise funding. I've had lots of people reach out to me on LinkedIn thinking, I've got cash to raise funding. What are the errors that you see founders keep making that they can fix before they come to you with an opportunity?
I think it's just about having your ducks in a row. Just making sure you have simple things like, your business is registered as a CIPC account. You can either be a closed corporation or private company. Funders don't tend to usually go for sole proprietors or partnerships because those tend to open up a lot more risk. And there's a lot more risk from a funder as well as from a business perspective. So setting up companies, it's quite easy to do. You can do a quick Google search. It's quite easy to set up a company yourself even these days on the CIPC or the BizPortal website, if I'm not mistaken. Having your tax affairs in order, just making sure you have tax clearance and things like that in place. All these compliance things that are base documents for business to have in place. The one other thing also that's pretty prevalent in the South African economy is that we, unlike the US economy, we tend to find startups as a bit of a swear word in the industry. Startups tend to be much more riskier. People don't tend to have business plans behind it. It doesn't have an execution plan behind it. So we tend to look at businesses where the founders or the entrepreneurs have put a bit of their own skin on the line for a year or two, showed some traction, and then obviously come to or approach a funder for some sort of growth finance or equity finance or venture capital finance. So putting yourself out there before you actually need the funds is quite critical, because we want to see entrepreneurs who are risking themselves before they risk funds from other people. And that makes a big difference in the industry and your application. So I don't know if that makes sense to you, With.
Definitely makes a lot of sense. And I mean, again, you see a lot of companies, and I mean, you've seen them pre-COVID. You've gone through the lockdowns, looking at companies. You've seen 2021 coming out. Based on what you've seen, what is your opinion on the strength of business in South Africa compared to, say, last year or the year before?
I think the market is upticking. I mean, we're seeing a lot of, I would say, swings from the COVID sort of downturn and drop in revenues in businesses from existing businesses that we have funded. There was a quick upturn towards the later part of end of last year, and I mean, we're not seeing that slow down. So I think the state of business is quite good. The economy is growing quite a bit, and there is funding available. I think that's the biggest thing to let businesses know, that there is opportunity, there is funding available. You've just got to make sure you go through the processes to get access to that funding.
So there is funding available. There is also opportunities to get into positions. It's interesting, going back to that, is in Cape Town, there's a lot of asset managers that you can get into as an accounting role, or you can go to work at Old Mutual in an accounting role, and you can network your way. If you really wanted to get into venture capital, you really want to get into investments, you can find a way if you put your mind to it. So
no, for sure. And always the one thing I've seen a lot now is there's a lot more job posts coming out at analyst positions or senior analyst positions, associate positions, in a lot of these specialized finance houses, private equity, venture capital firms. And I think it's mainly due to, I think, the brain drain that we're having. So a lot of professionals, including professionals in finance, are sort of leaving the country. But the interesting thing is there's a lot of money coming in from your developed countries into this country, or access into this country to access the rest of Africa. So I think there's a lot of opportunity within the next 12 or 24 months to get into the space. It's just about literally not starting from zero, getting a leg up in terms of technical capability, networking yourself again, like you mentioned, maybe starting off in an accountant position, or even taking a step back. If you were in a sort of a financial manager position, coming back, starting off as an associate. If it's really something you want to do, start off as an associate, take a slight pay cut. I wouldn't say a major one, but in order to get into the field, you've got to build up the expertise and experience, and then I'm sure from there, a lot of the professionals will do well. Yeah.
I had a look at your LinkedIn profile, and it looks like you've got a bit of a side. Well, I'm assuming it's a side hustle. I could be correct. I could be wrong. Tell us a little bit about it, and then what your employer thinks of it. Like, did you need to go through any provisions, or is it like a similar type of service that you're doing? Is there a similar client base? What sort of conflicts are there? Maybe chat to us about that.
No, for sure. So it is a bit of a direct conflict, but let me just chat to my thought process around it. So it was actually something I wanted to start to help smaller businesses that don't have maybe the in-house expertise or the big budgets to get your big consulting firms to do this kind of advisory or transactional advisory services for them. Something I wanted to do for smaller businesses to basically give them that service where we can do an end-to-end starting application for finance for them and guide them through the process of applying for finances from your specialized finance houses. So not necessarily your banks, but like people who give money at reduced rates or specific financing for specific industries. I'm not going to mention names out there. I'm sure a lot of people know what sort of finance is available from government and non-government institutions, but are not banking institutions. So that's the offering behind what we're doing. It was something I had to run past my employer, but we agreed that my employer is they're quite great in that sense, is in that they promote entrepreneurship, and they want you to have these things and promote yourself and grow your skill set, even if it's outside of work. So as long as I'm not in direct conflict, if I'm not representing a client that's basically applying for funding or venture capital, private equity from my employer, then I'm allowed to provide those services externally to other clients who are going to another fund or service provider. So that doesn't prohibit me from doing it. But like I said, it is my little side project, and I'm enjoying actually giving business sort of the transactional advisory capacity and, being a part of their journey in growing. Yeah.
And I'm assuming it's probably those businesses who would never be able to afford that type of service if, in any other case. So definitely
Yeah,
helping the small guy.
Yeah, I like to tell them, look, you're getting a CA or professional person with the same output, but at a vastly reduced rate, just because I don't have the OPEX of a huge office building or a staff complement of, I don't know, thousands of people, which is still getting the same service and output at a reduced rate. So that's the business value proposition towards them. And of course, I want to help businesses grow, and like my end game or my what I enjoy seeing is actually going through that journey with somebody, from somebody who's maybe started off at $1 million revenue, just literally covering his expenses and paying himself a salary, scale himself to 50 million, 100 million revenue, and literally see the look on his face or see the look on the entrepreneur's face when they actually reach that level or they consider themselves as made it big. I like to walk that journey with those people, and yeah, makes a big difference.
It always surprises me with some of these businesses when they're like, no, my business is making R1 million turnover. I'm like, have you broken that down into months? How many people can you pay? You can't actually pay a lot of people on R1 million turnover if you actually break it down every month.
Yeah, I mean, they're usually just funding themselves after all the expenses, and sometimes it's not enough. Sometimes they just need access to that extra push or that extra money just to get, I don't know, maybe a new piece of equipment that might change the game for them, or a new truck or something that will trigger or enable growth from that perspective. And that indirectly leads to other benefits. You create jobs, you start impacting the economy, you start contributing towards the tax base of our country. And that's all great and positive things to do. Yeah.
Oh, it's amazing. It's amazing. I'm going to ask you this question that I love to ask all my guests. And that's,
sure.
What's one piece of advice you would give your younger self?
It's basically let me start off by saying is that, all of us, whenever we do something, we don't intend to fail in whatever we pursue or venture out. But what I'd like to tell myself is don't fear that failure. It's going to happen eventually at some point in some decision. Something's going to fail at some point in your life. And it's not to fear that failure, it's just to embrace it. Take it in your stride, learn from it, and do better in the next venture or next decision that you're making similar along that line. Take the learnings from those failures. Fail fast, fail often. I think I don't know where I heard that from. I'm not sure who quoted that, but fail fast, fail often, and that's where your learning curve comes in, and that's where you become better at what you do. Yeah.
Being an entrepreneur means making mistakes, so you have to learn to be comfortable with it.
I've made many mistakes, and I've learned to accept those as just part of the process of being better at what you do or what you want to achieve. It's just part of the process. Yeah, that's what I would tell my younger self. I think when growing up, or sort of my younger days or younger career days, I think I was so afraid of failure that I tried to do everything not to fail. But just let it happen in the course, and then obviously learn from it.
And there's nothing wrong with that. We come from that study environment where you have to get everything right. So it takes a little bit of a mind shift, but you'll get there.
There. That's it. That's the only thing I would tell my younger self. Yeah.
There's no questions coming through, so you must have answered all the questions that they put through. Any last few words from you, or anything we didn't discuss that you'd like the audience to know?
I don't think so. I'm just trying to think back. I think it's also what I'd like to just put out there as well is just allow yourself the opportunity to experiment in roles and in terms of job positions, especially when you're young. You don't need to know exactly what you're doing the moment you get out. And I think there's a lot of pressure, especially in the CA profession, that once we finish article, the first 2 years post articles define us, and that's where we're going to land up. I don't think that should be the case, and I think as a profession we need to change the narrative around that. That look, try something, do a job in financials or consumer markets, become an FM, become an operations manager. Do that, see if it works for you, give it a chance, get good at it, and if it's not for you, reinvent yourself and do something else again. It's not the end of the road. It's not the 2 years post your articles and that's it. That's your life. That's your career path, and that's your journey. That's all I'd like to say. Yeah.
I know we said we take questions. There's one question that slipped through a little bit late. You mind if you answer that one quickly?
No problem. Yeah.
Okay, let's see. We've got a question here from, well, it just says, where do you see the low-hanging fruit in funding application and processes?
Can we just elaborate on low-hanging fruit? Are we talking about the business, or are we talking about
I'm assuming a business applying for financing and applying for a funding application. What's the easiest, or what's the best? Let's try it either way. What's the best funding to apply for, or the easiest funding to apply for, maybe?
So that depends, right? So if you're I'll talk about an existing business or that's been in operation for a while, and then I'll talk about a new business. Existing businesses, I think the easiest way to get finance is through your bank. By easiest, I mean processes. It might not necessarily be the cheapest form of financing that you can get out there, but it's definitely the easiest and the most quickest way you can get financing. But operating in the space that I am in, we find that, look, even from a debt or equity structure, we'll end up being slightly cheaper than the banks. But on the flip side, that means a bit more work in terms of the application process, the due diligence phases, the modeling, the financial modeling, showing your growth story. And I think the low-hanging fruit lies in where a business has a growth story and just needs a trigger. There's just one trigger. Maybe I need money to buy this equipment to drop costs, or I need money to unlock maybe more inventory so that I can sell more to a certain client who wants more out of my business. So that those sort of applications tend to go a bit quicker. The ones that don't tend to go a bit quicker are the ones that are sort of the startup ones. The entrepreneur doesn't have a strategy on how they're going to grow or how they're going to acquire clients, or they don't have a base to acquire or to grow their clients. And those ones tend to take a bit more longer. Those are the high-hanging fruit, let's put it that way. The lower ones are definitely the ones who have an idea and know exactly what they're going to do with their money and how it's going to translate to growth, pretty much.
I mean, funders like track records. So
exactly.
So if you've got that, and there's a couple of fintech, I won't call them startups, but there's also ones where you don't need to go to a bank. You can apply online and you can also get access to it. So those are starting to come in, and something worth. The questions are coming through now. Jeez, they're all coming through a little bit late.
Sure.
The question is, what's your views on seed capital funding? Not many funding houses in South Africa focus on seed capital. Could this be a low-hanging fruit?
It could be, but you see, the problem with funders and finance houses in South Africa is we see that as a huge risk, because we're basically backing the jockey and not the track record, the jockey or the product. And unless that product has shown its track record, we see that as a very high risk. So in terms of the South African context, yes, it's probably an opportunity for a lot more seed funders to come in, but it's also willing or based on their risk and how they view sort of seed funding capital. I know a lot of fund managers are averse to that, especially in the South African space, are averse to that sort of funding. They want the entrepreneur to take a bit of a risk, put in a bit of their own capital to at least kick off the process, at least show some sort of, even if it's 3 to 6 months of traction from your product or revenue from your product, just show something so that we know what we're backing. Yeah.
And I think seed funding is more the purview for angel investors, right? Because they're willing to take on more of a risk for higher reward.
Exactly, and sometimes seed funding is not necessarily the best way to go. You might not want to pay that seed funder that minimum return he requires in whenever he wants to exit. So you've got to look at it from a return cost perspective as well, whether that's the right way to go as a business and as an entrepreneur. Yeah.
And last question from us, we got a question from Jan Hendrik. This is, we touched on it, but what route will you suggest after articles to get into corporate finance and private equity? Are there enough opportunities in South Africa?
I think there's already quite an uptick of opportunities coming about. I mean, there's some consulting firms that are doing a lot of corporate finance, transaction advisory. I mean, I think that's your best place to start if you can't get a foot into private equity directly, is do something in corporate finance. Do something that's transaction related. And there's a lot of those roles out there. There's a lot of consulting companies that are sort of doing the outsourcing model to the US and the UK, where we're doing the actual work in the corporate finance transaction space here from South Africa. So try and get into those spaces. Number two is set yourself apart from the competition. So there are many, I mean, I like to tell people there's always like, I don't know, something between 30 and 50,000, whatever, CAs, or I don't know how many people keep qualifying every year to become a CA. What sets yourself apart from that, from the next person that has just qualified with you? What have you done differently? Have you done something to upskill yourself? And I mean, always what you're doing as well in terms of social media channels. Put content out there. Show the world, show your network that you are an expert in something, or in the space you want to go to. Because then that also shows your employer that you have some sort of knowledge or base to go off and work in the industry. So that's my best advice. It's just upskill yourself and set yourself apart. And I think within the next 12 to 24 months, there's going to be a lot more opportunity, especially in South Africa, in the space.
Yeah. That's a great way to end it. The show has been live on YouTube and will be available on podcast by tomorrow. If you're watching on YouTube or listening on the podcast and you feel it's added value, don't forget to like, subscribe, and click on that notification bell to get automatically notified when the next episode comes out. Hitesh, thank you so much for your time.
Thanks a lot, Tooways.
Thanks everyone for joining us for another episode of Two Ways to Skin a Cat. Goodbye.